The next Fed interest rate is coming up in just a couple of weeks. And there's some interesting news that just came out today from the Fed meeting minutes. And I'd like to tell you about it today. This is your host, Ron Wysokarski, for the Black Hole of Real Estate. And the Fed had their meeting release of the minutes today. So when they met in September, they had all their meeting minutes, and they chose to put them out today. There's always a delay from when the meeting minutes go out and when we get to see them. So here we are, a couple weeks later. And what the news is that they're anticipating 2 or 3 rate drops by the end of the year. Now, mind you, they just did one last month, and that one kind of counts, according to them. So that means there's probably 2 more at the most on the way. Oddly enough, there's 2 more meetings this year. The next one, October 28th and 29th. Now, if you can remember what happened the last time, in the week or 2 coming up to it, it was so highly anticipated that they would drop the rates that the lenders went ahead and dropped the rates in advance of it and priced it in before they made the announcement. I suspect we'll see the same type of behavior starting next week, sometime around the 15th, the 20th, somewhere in that window. You're going to start to see rates going down, probably after the Columbus Day, if you want to call it that, holiday coming up next week when the banks are closed. I think right after that you'll see the pricing that will start to layer in for the eventual rate drop that I think is a virtual lock to happen October 28th and 29th. And what that would leave us with is pricing into a 1/4 point rate reduction, which is one of the things they're talking about. And would they possibly do a 0.5% at that meeting? I think it's going to be a 1/4. I think the chance to do the 0.5% was the last meeting. And I don't see them doing a 2-for-1 on this one and then skip in December. I think what will likely happen is they'll come down a 1/4 point this time, and then they will look at how things are going in December. And if they want to have that, that holiday buzz, they can do nothing. They can do a 1/4 point or a 0.5 point at that time. And that will give them a long runway to find out what's going on with the government shutdown, which is lingering in the background of all of this. I don't think the two are in any way, shape, or form related, because economic policy is supposed to be an independent body of the government where the president and the legislative and judicial have nothing to do with it. It's just the FOMC, Federal Open Market Committee, and they're the ones that look at economic policy, and they control the Fed rate. Right? Wink, wink. Of course they do. No one else would ever interfere with it. It's just them. But I do believe that you'll see a 1/4 point, October 28th and 29th, and December 9th and 10th. You're going to get another one just before the holiday, just to make you happy and have the rates come down. So what does it mean to you? It means that your sweet spot of the lowest possible interest rate is probably somewhere between October 15th and October 29th. Expect it to get priced in for that rate discount before the meeting, and then when the meeting happens, you might just see a little bump upwards like the last time. And this is what we've been talking about all year long, is that I do believe that rates will get to 5.875 this year, but then bounce back up to 6, because I think it's going to happen sometime around the first week of December. You're going to see some 5.875 interest rates. And then once the Fed meeting makes an announcement that, hey, we did the 1/4 point, I think you'll see it bump to 6. So the prediction that was made, a year ago, maybe 14 months ago, is playing out in real time. We're in the mid-6s right now, 6.3, 6.35. I saw 6.34 in a National Association of Realtors, if you want to believe them, post the other day. So if we're calling it 6.34 and we're relieving another 1/4 point off of that, it might be in the 6.125 range, by the end of the month. Really, really cool. And then by December, that last little bit will get you just under 6 at 5.875. So if you're timing the market or not buying right now, good news is on the way. Mortgage interest rates will be lower by, 1/4 to a 0.5% by the end of the year. Now, just because the Fed lowers the rates a 1/4 point or 0.5 point, not all of it goes into the mortgage interest rates, but banks will get aggressive. And this is a chance for buyers to shop. If they're looking to finance a purchase, a lot of companies will want to get some mortgages on the books before the end of the year. We'll put it that way. I think there'll be some aggressive pricing coming in here, and there could be some good deals out there. If you're financing and the rate is lower and your monthly payment is over, just a little bit over the line of where you want it to be, this could be the bit that gets you into the price point of the home that you want. And if you're looking at, let's say, 300, maybe this gets you up to 310 or 320 or 330 and get you a little bit more of the house that you want or a little better condition. If you're at 200, it will make a huge difference in getting it from 2 to maybe not 250, but 225 or 230 could happen with a 0.5% rate drop if you're looking at your debt to income ratio. So this is really big news if you're buying at the median level or a little bit lower. If you're just stretching and you're well above the median sales price, that quarter point is still going to help you with a lower monthly payment, and it might just get you through where maybe it's been a little difficult the last year or so. All right, so let's stack it and rack it. You're going to get a rate drop in a couple of weeks. It may start feeling or noticing for you that it's going to happen probably sometime after the 15th, before the 28th or 29th. Expect it to tick up a little bit if they do a 0.25%. If they do a 0.5%, then it will definitely trail down super fast, and you'll want to watch for that. It will be kind of like a starting line. If they come out and say on the 29th that, hey, we're dropping a quarter point, expect a little bump upwards in the rate. If they go to the 0.5 point, it will continue to go down. There's no easy way or accurate way to time the market or guess it. But right now, if I was a betting man, and I'm not, quarter point this month, quarter point in December, I think that's going to serve you pretty well. In the meantime, sellers, if you were thinking of putting your house on the market, this may be a good opportunity for you because buyers can afford a little bit more. Maybe they'll pay the list price that you really, really want. Or if you're moving, this could help you not only get your house sold a little bit faster because the rates are cheaper, but also you'll be buying with a lower interest rate as well. So as the rates come down, it will help you get your house sold and also help you on the next purchase. And I hope that's going to be good news for you. If you have some questions or you just want to know a little bit more about this, I would hit the subscribe button and definitely check in. If you got comments or questions, let us know. This is your host, Ron Wojciechowski, for the Black Hole of Real Estate.